Good day, fellow investors! Coincidentally, I recently just bought Mosaic and Nutrien stocks for my diversified portfolio. So after the food inflation boom 2021 and 2022, the stocks have been suffering, but that is normal when it comes to the market's perception of the fertilizer/food cycle. Nutrien is down 55%, Mosaic is down 66%, but that is just because there was this boom, and we'll discuss how do these two companies fit my portfolio, and I'll also add something new to the videos, a comparative table to put into perspective the risk and reward of each of the stocks we discuss on this channel. So let's immediately start. How does this fit my portfolio and why I bought? Just to give you a little bit of context, I have three portfolios on my research platform. I have the model portfolio, which has been there since 2018, which is how I would model a global value investing portfolio across the world. Then, due to high demand, there was this request by many of my customers to add a diversified portfolio, and I said it is a great thing to do to give more ideas, but also to source ideas for the other portfolios over time. And Mosaic and Nutrien fit that diversified, where the target is 20 plus positions to be managed over time. For now we are at 15 as it was recently launched. So let's discuss the stocks, why I bought, the cycle there, and then you can see whether this fits your portfolio and what's the strategy. When it comes to food, the key thing to understand is the fertilizer or even the food cycle. If we look at fertilizer prices, potassium, potash, phosphate, low prices, and then we have these booms, and then after the boom companies invest, and then we have again the bust. But given inflation, we are now maybe settling at an average cycle price a little bit higher than earlier, and costs are there, but inflation is also there. So if you want to rebuild what these companies have built here, you need to invest much more money. Therefore, it is justifiable that after this boom and bust inflation 8-10% that we had, average long-term prices could be a little bit higher because the underlying trend is clear. More and more fertilizers are being used as there is more people, the middle class is growing, more consumption of various foods, and you can see this here, the clear trend in potash growth demand. There is a clear structural trend, but there is also a clear cycle of boom and bust periods in the fertilizer food industry, and that's something a value investor can play on. Why? Because fertilizers are necessary, needed. You can predict the demand there because it's likely you will like to eat after you watch this video, but there is up and down, there is production, supply, and you can also predict that, so you can start getting a feeling around those cycles and make some good returns there. And this is clear of what happened. Negative sentiment, exuberant as always, the market gets exuberant, and now we are back to, let's say, negative. Mosaic, diversified company, phosphates, potash, and Brazil, Mosaic Fertilizantes. And this is perhaps the most important chart if you look at it. Yes, you would say P ratio, Sven, is 34, that's expensive for a value investing. But look at the cash flows. 2023, around $1 billion, likely a little bit less this year, but still positive cash flows. And in exuberant times, yes, they make 2.5 billion. In weaker times, they had big investments for their mines here, but they still make 500 million. So on a market cap of 8.03 billion, if they make on average 1.8 billion per year over the cycle, that's already a 10% return, just from what is there now. If we then also take into account Nutrien, Mosaic stock crashed a little bit earlier, so I added it earlier, Nutrien a little bit later. Again, diversified North America, South America, also Australia. This company was created in 2018 by merging the Potash Corporation of Saskatchewan with Agrium, the retailer. They have this vertical integration, and yes, 2023 was a great year. Everything was great. They did a lot of buybacks, so that's also something to take into consideration when it comes to the current values. But cash from operations went up, likely will stabilize somewhere because just retail does good EBITDA, and then we have other cash flows that depend on fertilizer prices. If potash is 150, they make 1 billion. If it is 400, they make 3.5 billion in EBITDA. That's the sensitivity. Hard to predict where will potash prices be, depending on demand, food prices and everything. But if we take the average cycle, as a company, I think that they make 5 billion on average, minus 2.5 capex costs. They should make 2.5 billion over the average cycle, and you can see here 2021 2 billion, they made a little bit more here, 2023 also good, but I think that 2 billion on the 23 billion, 2.5 can be depending on the future. That's again 9-10% return, as we have seen with Mosaic. They have been investing, they have very positive estimates for 2026 in the long term. Mid-cycle price estimates 7 billion in EBITDA. We could even say that they might reach 3 billion, and that means that the stock will likely double when that happens across the cycle. So cash conversion 5 billion minus capex of 2.5, 3 billion there. There are also risks. For example, BHP has decided to invest in the Jansen mine. That will be the largest potash mines, so that will certainly add supply, but if demand also grows, then we can see average cycle prices over time. Now, the most important thing when it comes to these stocks is how those fit your portfolio. We have calculated around 10% cash flow yield at mid-cycle, food, necessity, invested already, the mines are there, they give protection for inflation. We cannot predict, but we can assume 3%. Thus, we can say that an exuberant expected return would be 13% across the cycle at this moment, but that is maybe a little bit too stretched. I would say 7 plus 3, let's say 10, given the ups and downs. There is also a dividend there, and the risk is severe cycle downturn, especially if Jansen overproduces. So that's something you need to know when it comes to the risk and reward, and now we have to fit it into my diversified portfolio. There is a 6% maximum position when the value is there and the risk is low. I told you that there still might be a severe downturn. The value is there with these companies, expected return above 10%, but it's risky. It can still go 50% down. What happens then? Then, if it goes down at around cycle downturns, I increase the position, because value investing is managing that risk. Okay, diversified portfolio, I can take a little bit more risk, but when there is low risk, because these are businesses that produce the needed things in our lives, then I simply add more and wait for the cycle to revert. It has happened always in history, it will happen again. And now a little addition here. When we go to a comparative discussion, Apple stock we'll discuss tomorrow. We have discussed ADM, perhaps a little bit again price above these fertilizers. Nestle overpriced. You can check the videos on this channel, and we can put it into the visual perspective. Nutrien, Mosaic, 10%, relatively low risk from a long-term business perspective, same as ADM, but a little bit lower return. And these guys have risks from a valuation perspective. For example, Apple, P ratio 34, that we will discuss tomorrow. This is the idea. You have to see how it fits your portfolio. If you want to see more ideas, just check my research platform in the link in the description below. Thanks for watching. I'll see you in the next video.